All right. What's up, guys? I hope you're doing well. James here from jamesdforsythe.com. Continuing on with the why the US dollar probably won't lose reserve currency status. From the video of last night. Second before I forget. I know sometimes it gets too loud, but here in Florida it gets hot. So having a fan on really helps. Let me get back. Right. To continue. Sorry. So basically giving reasonings why the dollar hasn't lost reserve currency status and other reasons as well. And we'll probably just continue on with the screen share, which I'll get right into for the source we've been using on why the US dollar is still the world's reserve currency, basically, and why it would be so difficult to take it down, right? And kind of as I guess as a caveat, um, that I should say is this is just to give this point of view, and I talked about this in last night's video, much more in depth and much more fluid, was to basically give the one point of view, and I'll look for more information on the other on why it probably will lose reserve currency status, just to really understand both sides, because that's kind of the whole point of the channel and everything else. So with that being said, we'll get into this reasoning and go on from there. Right, and so first we're going to be looking at over the period of from 1999 to 1999 to 2019, right? So the 20 years, 2 decades, right? For a share of export invoicing, so basically trade in general, foreign trade, right? And you can see with where it was the U.S. dollar, there's a lot of blue in here, except the euro as it's kind of its only exception, right? So when you're looking at invoicing in the Americas, like North and South America, it was 96%, meaning that in terms of international trade, the dollar was used in 96% of trade for the Americas, right? And then in the Asia Pacific region, it was 74%, and then Europe, it was much less. Obviously, it looks like around 20%, where the euro was dominant, as you can see by the graph, and also makes much more sense. The euro's a much the euro is also is kind of like another, I guess I don't want to say competitor really for the US dollar, but kind of another major currency, right? And so obviously in the eurozone it's going to be used more. And then the rest of the world, same story with the dollar being about 80%, right? Or sorry, 79%, right? And so it's used a lot, to say the least, in terms of foreign trade, right? And so also about 60% of international and foreign currency liabilities, which are primarily deposits. So like I guess that would involve like bank international bank accounts. I guess foreign entities having bank accounts as well, and other forms of deposits, right? And then also claims, which are basically loans, and these are denominated in U.S. dollars. And so this is the share of international and foreign currency banking claims and liabilities. So the claims being deposits, and you can see for the US dollar, that's about 60%, meaning that like 60% is of, 60% of foreign deposits are denominated in US dollars, right? And about 20% of those are of euros, and then it kind of just goes down from there, right? It looks, I don't know, maybe 5% was in the British pound, and then a little less than 5 was in the Japanese yen as of 2020, right? Looking at this final bar. And then going down to liabilities, and I totally got that switched. The claims are the loans. So the first one is the loans that I was talking about just now. The second one is the liabilities. So this one is where the deposits are, right? So it's about the same levels, right? Just a little bit lower in 2020 for the US dollar. And it seems like probably about the same for the other four areas, right? So euro, British pound, Japanese yen, and then other ones. Okay. So to ensure that dollar financing remains available during the GFC, the Federal Reserve introduced temporary swap lines with several foreign central banks, a subset of which were made permanent in 2013. I don't know why I'm having constant brain farts today. But anyways, right? So we're going more into central bank swap lines, which we'll see down here, and kind of some more facts about them. So the Federal Reserve also introduced a repo facility. We're talking about kind of giving dollar liquidity to foreign countries as well, right? And so whether or not that's, I guess we'll say, preferable or is okay, I guess, whether or not that should be a function of, say, the Federal Reserve, is not really the purpose of this video. I mean, they do it regardless, and kind of the reasoning seems to be because the dollar is U.S. Because the dollar is a global reserve currency, right? They you can't starve the rest of the world of dollar liquidity because it's no longer just their problem, right? If the entire world goes into recession, then the dollar and the United States probably will too, right? Because we outsource pretty much everything, right? And so that's kind of the whole point. That's like I was just listening to a podcast earlier this morning about basically the Nord Stream pipeline and how Russia put it down for maintenance, and like the turbine that they had to maintain was sent to Canada for to be fixed because that was the only place it could be fixed. And then because of sanctions, the Canadians didn't want to give it back. But then I was like, if you don't give it back, then all of Europe gets no gas, and so that was waived and a bunch of other stuff. But regardless on the kind of the geopolitics of that part, my point is they had to ship the turbine to Canada to get it fixed, right? And so there's probably you could think of a near infinite amount of examples of how interconnected and globalized the economy is, right? Globalization has been kind of the general theme for decades, right? So there's that. So the Federal Reserve also introduced a foreign repo facility through FIMA, so foreign and international monetary authorities, and then basically those foreign think those foreign entities who have bank accounts at the Federal Reserve Bank in New York, right, um, can now participate in this branch of repo, it seems. And this was made permanent in 2021. So just keep it kind of puts in perspective like there's nothing more permanent than a temporary government program. And so you see with the swap lines becoming permanent in 2013 because they were supposed to be temporary, and same with the temporary repo facility or standing repo facility that was made permanent in 2021, right? Just saying. So, although other central banks have also established swap lines, non-dollar denominated swap lines offered by the European Central Bank and other central banks saw little usage. So you can kind of see this down here in Figure 7. So we have Federal Reserve swap line provisions by counterparty and central bank. And so we had for the GFC 2008-2010, seems like we have the ECB here is in orange, and then Bank of Japan is in blue, and so on. And so we're seeing it says billions of dollars. So I'm assuming this is basically purely just from the Fed, right? And so you see the sheer number of what was used, right? And then also for March 2020, that whole debacle, and you can see kind of relative values. So relatively, there was less for the that kind of recent pandemic that was used in terms of swap lines, but still a significant amount, and it seemed to be elevated longer, or maybe. Hold on. This is March to this being July. I would say like 3 months or so, about a whole quarter to it was on this elevated level and then began to drop off to where on this one is probably more like, I don't know, they have different x axes, so I'd assume maybe half a year or so, set 5 to 6 months for this kind of broad span between the middle, right? So then also comparing it for the Federal Reserve and the ECB, right? Talking about swap lines, and you can see which one was used a lot more. And so to say the least, right? With the you can't even see the orange on the second one where it's talking about the pandemic kind of relief part of it for swap lines, and then you can see it at least for the ECB, but it's still like an order of magnitude smaller almost. It probably looks like it's somewhere in the mid tens, 50 to 70-ish or so, and then we're up here for almost 600 billion. So like 50 billion or 60 billion, put it in the middle, and then 600 billion times 10, right? And then the second one kind of makes me believe maybe the ECB didn't even do swap lines during the 2020s, which probably stayed somewhere down here. So yeah, it doesn't. Yeah, swap line provisions for the ECB are 0 or near 0 when shown in billions for October. So this is before for this part and after February 2019. So this is talking about this first one, actually. And so basically it was near 0 every other time, right? Okay. So to continue on with that. So issuance of foreign currency debt, which is debt issued by firms in a currency other than their home country, that other than that of their home country, um, is also dominated by the U.S. dollar, which is shown here in Figure 8, where we can see that 60%. Again, that it seems like everything is about 60%, but they're also kind of measuring the same sort of thing. So share of foreign currency debt issuance. So whenever a bank issues a loan that's denominated in another currency other than their own, over 60% of those as of 2020 was in dollars, and then about maybe a little over 20 was in euros. Kind of the same story with the previous graphs in terms of the relative kind of proportion, right? So, yeah. So, to continue with more kind of a cool fact, I guess, the most recent triennial central bank survey for 2019 from the Bank of International Settlements, the BIS, indicated that the US dollar was bought or sold at least 88% of global FX transactions in April of 2019. Wow. And so here is kind of the share of over the counter foreign exchange transactions. And keep in mind, this is 200% because you have to account for everything, right? And when you're doing a foreign exchange transaction, there's two currencies there, right? You're buying one and selling the other, right? And so basically, the US dollar was in 88% of those, meaning it was almost half, right? So that essentially means it was in almost every single transaction, period. Because 100% would mean that it would be on one side of the transaction for every transaction, and then the other half would be one of the other currencies, right? And so by the fact of it being 88% means that it was 88% of total of all of them, right? And so, yeah. And then obviously it's going to add up to 200 because there's two different currencies for the transaction, which I kind of already said, right? So now, as with pretty much one thing that I've noticed with economists in general is they love indices, it seems. So it kind of really compares with some kind of base year or baseline or whatever, how something developed relative to some other thing that they're talking about. Whether it be like, say, with like GDP deflator, where they pick a base year and then go from there. Um, things like that. They did it with a international currency usage, and so obviously it's not like an absolute number; it's an index. So you're kind of just showing it relative to other things, but that's kind of the point of what they're looking at. But especially when you're talking about currencies, it's really like how is the currency doing relative to other ones, right? So like other stores of value. Kind of see that. I just lost my train of thought. Anyways, so with this index, um, it's computed as a weighted average of, they say, 5 measures of currency usage for which time series data are available. So those kind of 5 measures were official currency reserves, FX transaction volume, foreign currency debt instruments outstanding, cross-border deposits, and cross-border loans. All things that we've kind of talked about above, right? And so the dollar index level has remained stable at a value of about 75 since the GFC, well ahead of all the other currencies. It's pretty much just been level this entire time. It seems like it dropped below 70 for a few years since then, going into 2020. So there's that as well. And their actual weightings, they have 25% for FX reserves, 25% for transaction volume, FX transaction volume, 25% for foreign currency debt issuance, and then the rest is 12.5% split between foreign currency and international banking claims, which is the loans, and then the foreign currency and international banking liabilities, which would be the deposits, which we also talked about above, right? So kind of see that there's a big gap between the US dollar and everything else, which is kind of the point of what they're trying to show, right? And then the euro's in second, and then the rest are kind of just there. You can see the Chinese renminbi is increasing, but it looks like it's somewhere around like 2% according to this at in 2020. So yes, it's an index, but it's also like relative to these measures, um, still not a very significant amount, right? So just something to keep in mind, right? So kind of concluding and getting their own kind of words in it. Probably just read these parts straight off just because it's their point of view. So, however, over a longer horizon, there is more risk of a challenge to the dollar's international status, and some recent developments have the potential to boost the international usage of other currencies. Basically, starting to talk about like, why is it the reserve currency? Like, how is it? What's the time horizon, right? So, like, when will it kaput, so to speak? And so, if fiscal integration progresses and a large liquid market of EU bonds develop, the euro could become more attractive as a reserve currency. This integration could potentially be accelerated by enhancements to the EU sovereign debt market infrastructure and introducing a digital euro. And the kind of one comment I want to say is they've been talking about this stuff a lot more frequently, at least from what I've noticed and what I've been reading. It seems like almost every single thing I read from not even just the Fed, the the Board of Governors website, but like even the individual reserve banks or just blog post from a reserve bank. There's like almost every single one has something about a CBDC in some form or fashion. Maybe not a US one, but other foreign countries as well, right? So another source of challenges to the US dollar's dominance could be the continued rapid growth of China. So the Chinese GDP already exceeds US GDP on a purchasing power parity basis, according to the IMF World Economic Outlook, and is projected to exceed the US in nominal terms in the 2030s, right? So, however, there are significant roadblocks to more widespread use of the Chinese renminbi. Importantly, the renminbi is not freely exchangeable, which is kind of a definite roadblock. Um, and the Chinese capital account is also not open, and investor confidence in Chinese institutions, including the rule of law, is relatively low. And they give citation. Um, So, a shifting payments landscape could also pose a challenge to the US dollar's dominance. For example, the rapid growth of digital currencies, both private sector and official, could reduce reliance on the US dollar. That's one of the reasons why they kind of push or they're researching more into a central bank digital currency or a Fed coin, whatever you want to talk about it, however you want to label it. That's one of the kind of their main reasons for doing it, as they state in the actual reports that I have been doing the other videos on. There's a whole playlist in there as well. So there's that too. That said, it is unlikely that technology alone could alter the landscape enough to completely offset the long-standing reasons the dollar has been dominant. Because they always have to paint it off in a good light, right? And then sources. Right? I'll probably go through some of these as well. So I didn't realize they actually quote The Economist. Because most of the time I've just been seeing like actual like academic papers and stuff, which is more my forte of what I have experience with. But still, either way, info is info, I guess. Um, but yeah, those are some more reasons for why the U.S. dollar probably won't lose reserve currency status, or at least anytime soon. So it's one of those things that I think a lot of people get kind of mixed up, or a lot of arguments happen from, is someone will say like, "Oh, we're gonna go through hyperinflation," or, "Oh, we're gonna have the dollar's gonna increase in value so much that like the dollar milkshake theory from Brent Johnson in a way, right? But if you notice, like it's all time horizon. So a lot of the times I've listened to quite a few debates, or not quite a few, but a few debates between Brent Johnson and Peter Schiff as an example, to where if you pay attention to like all of like the really smart people, and just using those two as an example, and this is including like many other ones, right? Um, a lot of the times their long-term, um, kind of idea of what will happen is pretty similar or the same, right? And so where people differ a lot is time horizon. Like some think it's going to happen in the next 6 to 12 months. Others think it's going to take 20 to 30 years. Like yes, that's important, but it's also like you have to understand like the nuances in why they think why they kind of attribute that to a certain time horizon, right? Because that's also a very much needed reason for to have any kind of thesis, right? Is time horizon. When is this stuff going to play out, right? And so it's even just investment thesis in general. It's like if you're buying a stock or whatever, it could be just like it's going to go up. It's like okay, when? Like what's your kind of time horizon like? And that kind of dictates how much risk, quote unquote, or volatility you can deal with, which are completely different. Risk and volatility are different things, right? And so you have to think about them differently, right? So just because something's volatile doesn't mean it's really risky, right? It really depends on, it's a nuance you really have to think about, but that's going down a rabbit hole and not the purpose of this. Um, but yeah, anyways, I'm going to look around, and if you guys find anything as well, I would love for you guys to put it in the comments or whatever. If you find a paper, just put the citation, um, especially like academic papers and such. Um, put those in the comments, and I'll give it a look, especially for the alternate point of view on why the U.S. dollar will lose its reserve currency status and whatever time horizon that may be, because it seems like even the Fed is acknowledging long-term risks um, could possibly, destroy U.S. hegemony, right? Um, at least if you kind of read between the lines, it seems. But again, time horizon. Like, are we talking 6 months? Probably not. Are we talking 20 years? That's a much more in-depth and there's a much more in-depth discussion, maybe. But I think that has a larger probability. It seems like the way I think of these kind of things is pretty much all of a game of probabilities in a way. And so it's there's a probability some event will happen. In this case, the US dollar loses reserve currency status, right? And so now you have kind of a probability distribution function with respect to time for that event to happen. What does that PDF look like, right? And so I think this one kind of looks more like a yield curve, so or how a yield curve should look, at least towards upward sloping and goes up with time. Um, Meaning, what I mean by that is that the probability of the US dollar losing reserve currency status as time goes on increases, at least from my perspective. But that doesn't mean that it's going to happen 10 years from now, right? It could be 20. Who knows? One thing that I've noticed so far with paying so much attention to pretty much just global stuff, global macro, and some geopolitics in general, because unfortunately you kind of have to mesh the two now. Um, Politicians are really good at kicking the can down the road, and it's rather surprising on how far they can kick it. Um, but we're going to leave it at that. So with that being said, that's it for this video. If you guys find other sources or whatever you want me to go over, or something that's relevant, especially if it's irrelevant, I'll probably open it and then not do anything with it. It's not really the point, obviously. But anyways, I'm going to leave that there. So I hope you guys have a good night, and I'll see you on the next one.